The market really sold off, but this is also the perfect time for people who are looking to buy a few companies at a discount. This will be the perfect time. And funny enough, this will be the time that we'll say cash is king. Cash is king because that cash that you have sitting on the side serves two purposes. First, it covers expenses if the economy deteriorates and your income is affected. And secondly, it gives you the ability to buy assets at a lower price if the market keeps falling. Now, remember that people had cash during the 2020 COVID crash and then the 2008 financial crisis were able to buy quality assets at a generational discount. Now, cash is not just a defense position, it's also an ammunition for opportunities when it arrives. So, for people who were prepared for the 2008 crisis by maintaining liquidity, diversifying their holdings, having a plan for tax optimization, they did not just survive, they thrived in the recovery that followed. For that matter, people who panic sell or who sold at the bottom, these people made an emotional decision based on headlines. And that also refers to us as well. I wouldn't like us to make emotional decisions and sell at the bottom. All right. So this should be a moment of preparation, not to panic. Buy cash reserves, build cash reserves, diversify your holdings, audit your risk exposure if there is any, and then look at this pullback as a golden opportunity rather than a signal to flee from the markets. All right, so hold on, and the market will bounce back. It always does. And do not have a weak hand, just hold on or buy more if you have some cash sitting on the side. Buy the dip, which I don't think this year is going to be a year that we buy the dip and it rips. I think this will be a year that for the first 3 months, it seems that it's going to be a year that you buy the dip and it keeps dipping, but it should be a year that we accumulate. So when the war is over and all is said and done, at least you would see the benefits reflect in your portfolio. All right, so with that being said, I have it on my mind today. My objective today would be, someone brought it to my attention that, Josie, the other time that we had a session, we created a watch list. However, some of the companies that they were interested to invest in, which they brought up a few companies that I have added to the watch list. Amazon was one, Walmart, Target was another, and somebody also mentioned Starbucks. How about Visa? So those are a few companies that I have added to our watch list that we'll be looking at from time to time. All right, so with that being said, I would like to orient us to charting. Now, the other time we had the opportunity to build our watch list, and for today, we are going to orient ourselves on our charts. What are charts? Actually, the chart gives us a pictorial view of how the performance of the company from time past. And there is a saying that prices have memory, meaning that the prices at which the stock had sold at does actually repeat itself. So let me give you a fairly good example. Amazon, before I do that, let me just orient you to this chart. So I had to change from Yahoo Finance to TradingView because I'm fairly familiar with TradingView as compared to Yahoo Finance. So here, and with TradingView, they do have the premium version and they also have the free versions. And some of the indicators that we'll be talking about, hopefully, I think some of them you can have access to those indicators with the free version. So with the charts, mostly you have your watch list that you can build like we did when we had the Amazon platform. All right. And then you have time frames at which, let's say the stock market, we actually have an active session going on. And then we do have, so these are the time frames, the 1 minute, 2 minutes, 5 minutes, 10, 15, 30, hour, 4 hour a day, weeks, and we actually have months as well. So to have the history of how the stock had performed. So we have the day, we have week, we have months, we have 3 months, 6 months, 12 months. And then we have the minutes. Like people that do day trading, sometimes they use the minutes, but we do swing trade. So swing trade, we buy, hold for quite a while. So I personally, and also the weekly time frame. So before I get into any trade or before I buy any stock, I try to look at the charts to see in the past how the stock had performed and where the stock is at the time that I want to purchase it. And I also look at, because I'm always trying to shop for discounts, I try to at least use the 4 hour, the daily, and then the weekly as well. So you could tell that the larger or the bigger the time frame, the more data you have on the performance of the stock. So we've spoken about the time frame, and then we have the years. So let me hide this. So you can see that this is 2009, all the way right now we are in 2026. So it gives you all the history of price actions that Target had gone through. So with that being said, one other thing that I would like to bring to your attention are these indicators. Now, you are trading actually against an algorithm. You are trading against, and mostly, yes, it's human action, but these are algorithms that you are trading against in the stock market. You have your retirement accounts being traded here and all that, pension and all that. So you want to have tools that you can use that could aid you when making decisions about the stock that you want to buy. So there are two indicators that I actually use the most. And one is the Lex Algo smart money concept, and the other, which is these. If you see the bars that we have here, band is the right word to use. And the blue band is where it supports, where smart money is looking to buy. So if I were to get into targets, which right now, this is what we are looking at. So here, on this wedge, I'm looking at target. So if I were to look to buy target, what I would do is if I were to buy target, I would actually try and purchase target when the price was here at $90. So right now from 90 to currently $119. So here at 90, let's say if I'm working at Walmart, I would say that maybe with each paycheck that I get, so if bi-weekly or weekly whatnot, I could maybe purchase 3 to 4 shares of Target. And then I will purchase it and I'll hold it for quite a while. All right. So with that being said, from 90, I'll be purchasing it gradually to 140. And why 140? Because smart money is trying to sell Target when it reaches this target, which is 140. Now I can drill down and say that this is my weekly. Now, how would Target perform on the daily? So on the daily, smart money is trying to sell Target. So if I was to hold Target, but at $84, I'll buy Target. I'll be buying it. We got to resistance, which is the red band, and we actually broke that resistance, and then we went higher. We fell back, and then we ripped higher again. So our focus is to buy and hold for quite a while. So this would be my target plan. So I would buy targets here, $84, hold it for quite a while. And you could tell that if I hold target for, let's say, a year or two, I would actually get some profit off it. And from time to time, I can sell some shares, take some profit off the table, and let the runners run. So guys, these are things, and you can do it for, this is JP Morgan, this is MasterCard, we have Visa, we have Starbucks. So the red, blue bands, these are my resistance and my support. When I didn't have these indicators, I used to just go through each chart to where is my support, where is my resistance. But right here, it's automated, and you can see where your resistance are, where your support is, and where smart money is looking to buy. So you can go according to what smart money is doing. All right. So before I let you go, stay invested, guys. Have no fear. This is what people are doing, and I would like to share it with you so you can be encouraged. So if you can see my screen, this is one of the discourse that I joined, and people are actually buying and holding stocks. And sometimes you don't have to get a lot of stocks. You can concentrate on just 2 or 3 stocks at a time. All right. And people are doing it, guys. And we don't have any excuse not to do so as well. All right. And here people are sharing their sell. This one said, I added 65 shares of SoFi at this price. People are sharing their weekly buys. So this is just to encourage you that people are out there accumulating as much as possible at these discounted price, and we can do same as well. All right, so guys, till I come your way, I'll stay invested and be good. All right, thank you.